Thank you, Angel, and hi, hello, everyone. Welcome aboard. It is Thursday already. Hope you had a wonderful week thus far, and you've done better than I have. I've only had one trade, one loser. I'll explain that in a very, very short period of time. But first up, let's take a look and see what the pound is doing today and if we can trade a breakout. Be interested to see. Not much happened in the wash of the FOMC. Ash will talk about that in a minute. I have really no nonsense, no news duty very shortly, taking you through the Euro US dollar breakout trade, which I did place. I was up this morning. I had to go on a very long drive today, and I was up, which was about 3:45. Then I woke up, and FOMC is at 5 o'clock my time, 5 a.m. And I had just had time before I took off to place the order. So I will go through that in just a tick. But first up, pound US dollar, are we going to trade a breakout today? There's the FOMC statement right there by the look of it. We may well have turned around here and gone into trend. So I think that's probably a no for me. The range isn't too bad. There's the range there. High and low. Don't really want to be trading at that level, do I? Do I want to get in the market at that double bottom? I don't think so. And the weekly pivot's dead ahead. So this, I'd really like to get the nitty gritty from Ash shortly on what the FOMC did result in. I understand from, I just had a very brief look at the headline, that they did go into some tapering. That would suggest that there may well be a change of sentiment, but I ain't seeing too much in the markets, I've got to say. We'll see. So I'm going to trade the pound today. I don't like where it is in either direction, so let's just keep it in the range for now and get on with the job. Okay, let's go to the losing trade that I placed on Tuesday. Now, if you guys were listening closely, and I hope you were, you wouldn't have suffered the same fate as me. And the reason that I suffered the fate was that I was driving this morning. Now, when you saw this bar here, and I did say if we got to close above the weekly pivot, it would be time to get out of that trade. And that's pretty much what should have happened. And you would have lost half of what you put on, half of what stake you put on. I didn't, because I was driving, and I'm out of that for a full 0.5% loss on my stake. So the lesson here is, well, we fell into the trap pretty much trading at the bottom of that range, but we weren't trading on the 4-hour chart. We were trading on a daily chart. And I did expect that we would get a little bit more out of this. There was our TP1 level, didn't happen. And as soon as you saw this bar here, followed by this bar here, that was time to get out. It was all over when that bar was followed by that one. So that's nothing really else to go through, because I haven't seen a chart all day since I set up the FOMC trade. So let's look at that. I haven't cancelled it yet, so it's easy for me to explain whilst it's still in the market. We had a range. The range that we're looking for when we trade the FOMC breakout is the range of the week to date. So Monday, Tuesday, Wednesday. And we take the high of that range. We take the low of that range. We take 15 pips off and put a short entry in. We add 15 pips to the high and put our stop loss for the short in, which of course then becomes our entry for the long. Neither has triggered, therefore they both have to go. Now I set that up as no CO on the trade manager, which makes my life very easy when I'm driving, but I expected to come back today and see that we've got a TP1 and we're halfway to the moon. Not the case. So I wonder what exactly happened. I'll ask the question of Ash very shortly. I'm sure he studied he probably watched the announcement, but I'm sure he has studied the statement, and I have no idea what was said, apart from the fact, as I say, we've gone into tapering on the US. Sorry. Hello, Paul P. Great to see you too, mates. I hope you're 2 days off. Well, I'm pretty sure you wouldn't have had 2 days off, but I did know I was flat out. Look, seriously. Spring and bamboo. Wow. I'm just so busy, it's amazing. As I said, I went for a long drive this morning, 1,000 kilometers, and I haven't been back that long. I've just had time for a shower and sit down in front of the charts to say g'day to me trading buddies. So g'day, everyone, and thank you for joining us. Ash, you ready to come in, buddy?
I certainly am, mate. Yeah.
Hang on.
Oh, yeah, very good, mate. Very good. I think a fascinating day yesterday in many respects, even though I think that the reaction was relatively muted.
Yeah, I can't see one, frankly.
You can't see a reaction. Yeah. Well, I mean, it was priced in, I guess, wasn't it? I mean, this is some of the aspect of it, is that it was priced in. However, if we consider what it really means for the stock market, which of course is going to be my main focus, but it will spill over into equities as well. Into currencies as well. What it effectively means is that I wonder whether it's the beginning of the end, mate. And I don't know if you finish with your charts.
You mean Armageddon or just the markets?
Yeah, just the way that kind of, you know, people have been buying up global equities. This is the Nasdaq, and I find the Nasdaq at a really interesting level here, because when you see these patterns and you're making these all-time highs, yes, you could use Fibonacci tools to extensions and this, that, and the other. And I would use one, but for some reason it's locked in here without it's set on to give me extension tools, but I can't seem to get it. So I'm not too worried about that, because what I'm really looking at is this pattern here. So this is the current channel, if you like. And difficult to draw the bottom, I found, but it's probably somewhere around about there. But we're at the high end of that channel. Now, if we take that channel out, then we do get into kind of Wonderland's situation. But there's a few things that I think we need to note down here. And this is, we'll focus on the technicals first, and then we'll focus on the reasons why I think the market might well come down from these levels. Let's bring in this. Look at this. I thought this was quite interesting yesterday. You bring this in on the daily. Look what's been happening for the last 3 days on the daily. As we've been pushing up into the channel, the top end of the channel, the volume has been reducing. It's coming down here, which is kind of suggesting that that the institutional traders, if you like, or the institutes that are out there, may not be participating in this last hurrah, and it kind of like gives that blow off top kind of feel and sense about it. And we can kind of see where the institutes get in, and they mainly get in anyway, where they get in at their heaviest. And look here, this point here, big heavy volume. And the market pushes up. Now, it doesn't mean just because there's heavy volume that the market pushes up. It just means that there's a lot of participation there. The fact that it pushes up tells us after the event what that volume was suggesting. But look, every single time there's a low, there's a spike in volume here. That one, you could consider it a low. There's a little bit more of a rally there. But here, what we've got here, as it approaches the highs, we did have a pickup in volume as the market did start to come up. And if we line that up to where that volume has really dropped off, it is this price here, this point here. So that would suggest to me that that at minimum we're probably coming back to test this level, and it's a significant level as well, because even though we're at all-time highs, which means that you're not going to get multiple touches along here, you can see that it is the structural high, if you like, of the previous high on the weekly, and of course that's where the monthly previously kind of failed once before. So I think we come down a little bit, but let's talk about why now. The fact that that the market has continued to buy up into the FOMC statement is it one of those situations where it's buy the rumor, sell the news? And even though the news is relatively positive on the face of it, because they're not raising interest rates, the market would have been incredibly worried about that. And I think Jerome Powell deflected quite professionally the talk of interest rate rises, and interest rate hikes. Effectively, he's saying, yeah, you know, that the market conditions aren't there yet. Yes, they're there to taper, but they're not there to raise interest rates. When interest rates get risen, that means that liquidity is choked a bit more, and it means that the market is basically saying risk is back off. The risk is higher now. You know, when you've got lots and lots of money floating around and financial conditions are really accommodative, it's basically saying take loads of risk. You know, take as much risk as you want because you can borrow low, you can get into the market. If the market starts to pump, you're paying back at a very small rate. If the market comes down a little bit, you're paying back at a very small rate. You're basically able to withstand and and ride out some of the negativity. Now things are going to start becoming different because interest rates eventually will rise, which means that those people that borrowed and over leveraged, which there will be many companies would have over leveraged to get in their positions, if they are not ready to start cutting back, because the obvious kind of thing to do makes complete sense. Make hay while the sun shines. Totally down with that. Borrow when the market is allowing you to do so with cheap interest rates. As long as when the interest rates start to flip up, you can start to reduce that borrowing and not only reduce it, but pay back the money that you did borrow because now you've managed to inflate the amount that you borrowed in the first place. Some very sensible businesses will be able to do that. Others probably won't. Others probably won't be used to I guess it could be basic economics, but you could even see it as a bit more complicated economics. I don't know. And there may well be some businesses which will start to struggle. Now, the fact that they are tapering would suggest that interest rates aren't going up yet. However, this isn't true because as soon as they start to taper, supply comes out of the market. Now they're talking about, I think now don't completely quote me on this, mate, but I think they were buying $120 billion a month, and they're reducing that down to I think it's $10 billion a time, but it might be more than that. I think it might be more than
15,
that.
15, I think I read very
16,
briefly. But
16. That makes much more sense because to my maths, it was going to be August by the time that the asset purchases were effectively going to stop happening. So that would make more sense that it is 16. So that's 85 in government securities, and I think it was 35 in mortgage-backed securities. So now when that money starts coming out of the market with, incidentally, the government wanting to borrow more because they want to spend trillions of dollars on infrastructure, then it starts to choke liquidity, and it does raise interest rates by default. And I'll show you what I mean by that. Look at this. This is the US 10-year. The US 10-year yesterday. Now this is the chart from yesterday. I wonder if I can get this at full screen. I probably can. There we go. This is the US 10-year from yesterday. So this is the 3rd. And look what happened. 51 almost to 1.6. Now it's not particularly tenuous just yet, but with this rising, that means interest rates are rising. Because the bond yields that they borrow against, the bonds that they borrow against, will mean that those the payments back are going to be greater if this bond yield continues to rise. And it was a massive move yesterday, really, when you consider that over a day of the candle. So this could start to rise to the upside. I suspect the 30-year and the 2-year is probably going to be quite similar. The 2-year probably particularly. So interest rates will rise by default. And that does actually put pressure on the stock market because the stock market is the place where there's risk off. And I wonder, as I said at the start, does this signify the beginning of the end? Now, I don't think it's going to happen overnight. I don't think it's going to happen tomorrow. I don't think it's going to happen today. I don't even think it's going to happen this month, probably not even this year. But I would have thought by around about April next year, there could be starting to get a bit of a switch in sentiment, and the good times will potentially be over. And if you look at some of these, looking at these indicators, we know I've just pointed out with the volume is shrinking down here. But if you look at some of these indicators, now I'm going to use the RSI because it's the one that I use the most regularly. If you look at this RSI here, where are you? It'll be in here somewhere. There we go. I need momentum. Where does it say momentum? I don't see that. Oscillators. This is what we need. This. I'm going to set it to 14 because that's the normal. But look at this on the RSI, monthly RSI. Now we're just looking at the NASDAQ. We'll look at the S&P. NASDAQ, embedded, overbought and embedded, dangerous. Weekly, just got to overbought. Daily, overbought. I mean, just going down every single one from here on in. The 4 hourly's overbought, the hourly's overbought, the 30 minutes overbought, the 15 minutes overbought, the 5 minutes overbought, the 1 minute's overbought. I mean, they're all overbought right now. So it does suggest that we're probably going to be coming down. Now, if you switch this to the S&P, monthly, embedded, dangerous. Weekly, overbought. The daily's overbought. The 4 hourly's overbought. So the messaging here is that we are in a very, very dangerous situation for anybody that thinks that they can jump on board here to try and get along. There will potentially be a repricing. I don't know where that repricing sends us, but I think the stock market currently is now overbuoyant. Now we've had pricing questions, and earnings season has been particularly good. So anybody that was buying up until the end of earnings season, completely justified, you know, off the back of GDP in the States, which was relatively benign. I think there was a bit of a concern about earnings season, but earnings season's actually proved that GDP print to be inaccurate somewhere along the line. So GDP in the last quarter, fantastic. Sorry, earnings in the last quarter, fantastic. But what happens now when we start getting this asset purchase tapering? I would have thought with that money becoming more expensive, you know, people potentially having to pay more for mortgages, because, you know, this will all feed through, that we're just looking at the bond, the 10-year bond. People will be getting mortgages in the next, you know, between now and when they do raise interest rates. Their mortgage rates are going to start going up. So that means that people will have less money, and that means that the consumer will probably be spending less on what they were spending on before. So I don't know whether we'll be crashing necessarily, mate. And the reason that you don't know that, or I don't know that, or anybody doesn't know that, is because you don't know what tools they will use if things start to look a little bit hairy. But what I am suggesting is things are going to start looking a little bit hairy.
Yeah, look, perhaps they've learnt their lesson from last time. I think the Fed went too early, speaking of early, when they raised after... Shit, what was that? Trump? No, I can't even remember the circumstances now. The last time interest rates went up, whenever that was, I can't remember even.
Yeah, it was during the Trump period. Yeah.
And the Fed just went nuts. You know, they went 3 in 6 months or something like that, and the whole world was behind, and the dollar rallied, obviously, on the back of that. Where do they stand on that now in terms of the dollar value, in terms of the debt? What's weighing on their mind more than anything? Is it, do they really care about the debt?
Well, who's that? The Fed?
The Fed.
I think the Fed have got a very, very difficult balance to try and navigate, because they've got the debt is a problem. I mean, you know, as soon as Biden gets all that money that he's going to sort of start, you know, pushing out into the market, and the interest rate starts going up, then the government have got to pay that back at a higher rate. That's not a great look. The second thing is that the Fed are looking at different metrics, and they're saying that their big ones that haven't yet been met is maximum employment. You know, we've seen wage inflation going up. Sorry, we've seen wages inflate. So if wages are inflating, that would suggest that the unemployment situation is probably already in a pretty good spot. Because why would you get wage inflation if there were an abundance of workers? There's not. Is
that a real thing? Wage inflation? I haven't seen that here yet.
Yeah. Actually, in this country, they've announced a 6% wage hike starting next March, I think, or April for the minimum wage, and that's a massive jump. 6%, 6.6%, I think it was. So it's closer to 7%. Massive jump in the
but does that drip up? Does it feed up, or is it only the bolster the?
That's a really good question, mate. That's a really good question. I suppose it will go to the place that they are lacking the most in workers. there was a story yesterday which said that farmers from the UK are exporting meat over to the EU so they can get the butchers in the EU to prepare the meat and then import it back again. So
Oh
it
shit!
kind
You
of,
just reminded
yeah.
me.
Oh man,
I left the meat. I left the meat in the back of the van. I have to excuse myself for two
no worries,
seconds
mate.
and tell Alison to go and get it.
You go do that. You
Won't
go
be
do
sec.
that real quick.
Okay.
Yeah, John, it is like an interest rate through the back door. That's exactly what it is. In a way, I mean, I suppose when you know this stuff, it's quite obvious and it is telegraphed. And we'll see what happens with the 10-year. I mean, let's have a look at the 30-year. Oh, did I just close that down? I hope I didn't. No, I didn't. Here we go. Let's have a look at the 30-year. US. This is investing.com, by the way. So you can see this on investing.com. Let's do it this way. Let's see how they've listed it. I'm not sure how they've listed it. There we go. T-bond. Don't give me that. Now, the long end of the curve is actually coming down by those things today, but let's see what happened yesterday.
Right, Angus's bones are rescued. It's all good.
Oh, that's good. That's good. You'll be happy about that. No barking later. So this is the 10-year. Sorry, this is the 30-year. Completely different look, actually. You know, the 30 years gap to the downside. So I'm not quite sure what the thinking behind that is, but let's see if there's a US 2-year as well. Here we go. Yeah, you see that the 2-year is going to start. The short end of the curve is going to start coming up, as I say, because we're going to start to see those asset purchases reduced, and it will mean that by default the treasuries will go up, because it doesn't matter if there's bond traders out there. The biggest buyer of bonds right now is the US government. Sorry, is the Fed. So if the Fed are going to be reducing their purchasing of bonds, then of course bonds go down in price, because you don't have the buyer there anymore. You've got this big buyer there, and the buyer's going to go down. Now the bond price and the yield are inversely correlated. So when the bond price goes up, the yield goes down, and when the bond price goes down, the yield goes up. So the bond price will go down because the buyer is leaving the market. And that means that as you say, John, by default, that will push interest rates up. And that is the metric that we will need to see, what the borrowing is from banks and all these other institutes. So we need to watch out for the 2-year and the 10-year, because if these two start going up relatively quickly, that's when we might well see the change in the bonds. Yes, John, exactly. Higher costs, without saying it. Exactly that, mate. And then if you get a reduction in bond buying, and effectively a reduction to the point where there is no more bond buying, and then you get an interest rate hike, then it's double bubble, and then it's kind of then you're really adding fuel to the fire, and the torch paper could actually be lit at that point. Having a look at what that's affected so far, I mean, so far that the S&P will continue to push to the upside. I think that there's probably still enough confidence out there that this isn't going to affect people, and it might not do this month. There might be one last hurrah, no problem at all. But I would suspect that this might well be the turning point. Eventually we'll look back on this particular period and say that's when the market started to go up and then just curve and start to come down again. Things will get repriced, things will get revalued from this day forward, I would have thought. Looking at gold, the interesting thing with gold is that gold has managed to hold this level so far, and it looks like a bounce point. It looks like a really good bounce point. When the treasury yield tends to go up, gold has suffered. However, when the taper tends to start, gold does also tend to go up. So this is the point we need to start sitting up and listening. Now, so far, as I say, I've opened up the charts this morning and I'm looking at the S&P and the NASDAQ, because when I look at the FTSE, it's going to be flat. And the reason that the FTSE is going to be flat is because we have the this today. Let's bring in today's news, and what we have is the Bank of England. So there's not really anything to do with the FTSE. You may as well leave it be. Not it's kind of a nothing to see here kind of situation with the FTSE. But with the NASDAQ and the S&P, they've already, the NASDAQ's already kind of crept up another 0.5%, and I think the S&P is probably around about the same. But the channel I drew with the NASDAQ, if you do the same with the S&P, you get a similar result. We're getting very, very close, to my mind, to the top end of a channel. And if you think about what we've, what I've been saying and what we're discussing with the bonds purchase reduction, and where we are technically near a channel high. And we have a reason now to suggest that financial conditions are not going to be quite as accommodative for these equities to continue to burst to the upside. So it's possible that this could be just an inflection point, and we might start to come off from here. So very, very, very dangerous place to get in. What it does do is, anybody that's interested in stocks, this is the time to start saving. It's a great time to start saving, really. I mean, probably should have done it a little bit earlier, but if you had your money, if you're not in the stock market, now's the time to start saving, because what you want to do now is put some money aside and get ready for that point where the stock market has to revalue, and then you can start getting in. This isn't the point, because I think we could almost guarantee, difficult to guarantee anything, in fact, impossible to guarantee anything, but we can almost have a relatively comfortable assumption that the stock market will not be, will be lower within the next 6 to 8 months. And that's when we'll probably pick up the value, because the people that made the money this year or the last 2 years are the ones that picked up the stock market down here. And yeah, okay, a lot on the way as well. There's a few points that you could pick it up, but anybody that's picking it up here, yes, you would have made a nice burst to the upside, but it's not something you can hold on to. Anybody that's picked it up here, down at this point here, or maybe here or here, can probably withstand a move down. But everybody else should probably wait until there's a really nice revaluation, and then we can get on board. Because, as I say, it can and often does stay at these overbought levels for quite some time, as we saw along here. It has been overbought for a period, and it does sometimes creep down. And when it gets up here beyond the upper level, it's embedded. And when it's embedded, it means that the stock market is hyper bullish. But when it's hyper bullish, this can happen. These big moves down. And this is the thing about this embedded nature. It almost gives you an indication of a danger to come. And the most concerning thing about this is that it's not embedded on a weekly or a daily. It's embedded on the monthly. And at that point, things do start to get a little bit concerning.
Looks like you're at the current point of 5 weeks in a row of rally. On the weekly chart, yes. 1, 2, 3, 4, 5. How many times has that happened recently? 1, 2, 3, 4, 5. There's one there. Yeah. Yeah.
Didn't really happen there.
I like to look
this is
at
the
those
thing,
things.
and if you're, look at this again. We looked at the NASDAQ on. I'm going to get rid of this indicator just so we can see a little bit more here. We looked at the NASDAQ And now if we go over here and look at the S&P, it's basically telling us the same thing. Look at this. The volume is just coming out. This is blow off top territory. You know, there's a potential for the kind of that's probably, if we, you know, we need to tighten this line right up, make it really good. Where does it come back to? There it is there. Right, that's a pretty good level now. Now, if we look at that, it would suggest that the S&P has probably got another. I mean, it could get to 5,000 before it comes down. Difficult to say. Maybe another 10% in it, which doesn't seem like, you know, the move down is imminent, and it probably isn't. And I'm not really saying that. I'm not saying that you know, now's the time to get short. I'm just saying that this is the time we need to be very, very careful. And if you are trading the S&P, NASDAQ, and FTSE, even though you should probably hold on to those longs for a little while longer, it's the time to get those stops in place, and, you know, maybe not be sort of too overconfident. Volatility may pick up here, and if we do look at the VIX, look what happened to the VIX. You know, look what's happened to the VIX over the last few days. It has just gone to sleep, totally gone to sleep. Now, if we start to come out a little bit and look at this on a weekly, look at the where the VIX sits. You know, it's getting close to a potential support zone. Look at this on a monthly. And this is suggesting, again, you know, what we saw with the S&P is another 10%. This is probably suggesting the same sort of thing with the VIX. So the VIX, you know, we're not getting the messaging just yet, but I guess I'm saying, you know, that to anybody that is thinking the stock market will go up and up and up and up and up and up, be very, very careful with that particular opinion. Things might be changing. I didn't look at the dollar index.
There's a big difference, isn't there, between it always makes new highs versus it always goes in one direction. Big difference.
Yes, absolutely. Yes, exactly. Yeah. It always makes new highs. Is very, very true. But the time aspect is the thing that we don't know. You know,
it's crucial. Yes, absolutely.
Yeah, the next time we might make a new high, you know, after today, by the looks of things, could be 5 years. You know, and it could actually happen that way in 6 to 8 months' time. When if we go on this particular trajectory, there's likely to be some revaluation. Now, after that, could there be another crash? If there's another crash, that's when the Fed start to go, right, let's go back to what we were doing before, and the stock market starts to rally again. This is the dollar index, and I guess you know, you're looking at the dollar index quite closely. Looks pretty bullish to me, mate.
Yeah, I mean, still in that range.
Yeah, inverted head and shoulders on the monthly chart could be in play. The inverted head and shoulders definitely looks like it's there on the weekly. Is probably in play as well. So it looks like we got that with a complex head down here, the kind of double bounce. That looks like it's in play as well. Yes, we've got this level of resistance along here for our neckline. But if that breaks through, then that is going to start to suggest that the dollar might well not only start to rally, but start to just get into the point where, you know, people are just very, very dollar centric.
If you drop that, sorry, mate,
the earth turns again. What that does to assets across the board, in a way, is any guess. I'll be interested, as I say, to see what happens with.
Yeah, I've got the next weekly candle. 1, 2, 3, 4, 5, 6. Maybe this week, end of this week, maybe next week, we see a breakout on the weekly candle. And I'm just counting candles in that consolidation box, really.
Here.
Yep. But if you put a trend line from, I can't see where that is. Go back to the high before the bit W.
This one here?
No, down. There. Now draw that through the high after the neckline. Yeah, up one more.
Yeah.
Yeah.
Interesting. So what you're saying is this is the Head and Shoulders.
Yeah, it's been broken and retested at the neckline.
That's interesting. So
I think this could be ready to go.
would make it. Yeah, I think you
It
could be right.
has already got down, but I don't know that it will. There's a horizontal level about 93.40-ish.
I mean, that would lead us definitely to this.
And that trend line, there's a bit of a confluence going on there. Could well be ready to go.
Yeah, I think you're right. I think you're right. Yeah, lots to consider. Lots of things to consider. As I say, I think today is way too early, and it looks like the stock market is still very, very keen. But blow off top territory, and you'll know the blow off top because it will blow off. It will just go bang, bang. So when you see the first bang, then you know that actually it's quite in relative terms, it's quite a safe time to get short. It's just sort of like it's just get yourself in, but you just want to see one last big push, and then we might well see things turn. But we're November. We get into December, the stock market tends to, rally right up until the Santa rally. So we might see the Santa rally continue to the upside. And then after that, it's possible that in the new year that things change.
Okay. Not sure. The index has moved a fair bit after the Fed, or is this just following trend?
Oh, no, it did. Yeah, it did. I mean, look at this on yesterday. Another very, very solid bar, and actually one of the bigger bars of the day. So yeah, the S&P had another big jump to the upside, as did the Nasdaq as well. Another big jump to the upside. It was slowing down a little bit here, but yesterday,
okay,
big cool. Bang. And you look at this on the hourly. This was that was the FOMC.
Yeah, sadly for me, the currencies haven't reacted too much, but if you put a line through the norm, if you like, if there's such a thing in markets, currencies tend to lag quite dramatically at times on a market move, and I'm thinking maybe this is one of those. So if I draw a line through. Yeah,
I'll tell you what though. Yep. Christine Lagarde said yesterday that there's almost no chance of an interest rate hike in 2022. So those two, I mean, we're looking for disparities in data, and it's hard to find them, to be honest, because all economies have been doing really well. I looked at the Swissy yesterday; it's doing really, really well. The Swissy, but would the Swissy raise interest rates or start tapering? Probably not. So you then start going, okay, well the data isn't. You can't really rely on the data for messaging. You have to rely on their rhetoric, and the rhetoric from the ECB is that we're not going anywhere. And now that the United States has started to taper, that would suggest euro dollar weaker, but probably dollar Swissy stronger. That's when you're looking at it. So this is where you start to say data is important, but it really depends on how they interpret it. That really makes the difference, because if the dollar and the euro are on equal footings for data, and the United States move, that means that they are increasing the value of the dollar by default. And if the European Union don't move, they are decreasing their spending power and their purchasing power by default. So it means that in some respects, does this seem like an obvious thing to do now, mate? Buy the dollar, sell the euro.
That's my point. That's where I was coming to. Maybe you're getting a discount at the moment on the euro versus the dollar because the currencies seem to be lagging what the market is saying.
Yes.
So I think there's every right to think that you may well be getting a good price on the euro at the moment. Now, of course, I, as a setup trader, have to marry that to something. And at the moment, I'm struggling, I've got to say. And I must admit, I'm absolutely brain dead because I've been sitting in a car behind the wheel for 12 hours today. So I'm certainly not going to place a trade, that's for sure.
Yeah.
But that's the thought process that's going through my mind, which is pretty fried at the moment, I've got to say. But I'll still kill the quiz. I know that will happen. but as far as trading is concerned, I'm just not there. I'm sorry.
Yeah.
I'd love to say to you guys, look, here's a setup, but it wouldn't be worth a penneth of goat shit, in my humble opinion. So
Yeah.
I'll make that statement right now. I won't be trading today for sure.
Yeah.
But
I think
that thought has come to my mind through what everything you've just said, Ash,
yeah.
has gone into my head, and I'm going, okay, currencies lag the market. I can see the definite opportunities here for dollar strength.
Yeah, for sure. I think gold and silver are the one potential caveat, because the dynamic might be in their favor too. But which might mean that if gold was to strengthen and over the dollar, and yet everything else is going to struggle, then you might actually be looking at a gold euro pair instead. If that's something that can be traded through Fusion. I'm not sure if it is. You can get it through Axie. So there are gold pairs that aren't necessarily the dollar. So there might be other things to do.
I want another next week on Monday. I'll have a far better opinion on what the Aussie is going to do. The charts told us what the Aussie was going to do this week, and that's pretty much played out.
Yeah.
Hope you got on board Aussie Swissy in particular. But I'm waiting for that to stop, because I'm waiting to buy the Aussie, right?
Yeah.
I'm just not sure yet how far it can go short. But I mean, that was always the play. I think it was short to get long. It was never a matter of okay, I want the Aussie, or I can see the Aussie going 10, 20%, because I can't. I can only see it rallying, and it's just waiting for that buying opportunity.
I think the SMB are going to struggle. I mean, if the European Union is saying we're not going to be raising interest rates, then the ECB are saying we're not going to be raising interest rates, then how does Switzerland, is one of the closest, they're almost integrated into that. How do they do it? I mean, maybe they do, but that all of a sudden reduces any kind of competitive edge they have. And as I say, you look at their unemployment data is enviable. 2.5%, I think they are, in the unemployment data. Of course, there's less people there to employ, but it's still, it's a fantastic number. Services and manufacturing PMI topping over 60. I mean, when you see that kind of thing, reaction has to come into play, because it's getting hot. Things are getting really hot. However, their CPI isn't too bad. And where the Fed their hand is being forced, to a degree, I think the SNB probably won't be. So the Swiss National Bank probably won't be. And when you kind of like put everything into the mix, I come out with they won't be moving. So that would suggest to me that the Swissy should weaken. But that's a guess. It's a complete guess. That's assumption. That would be my assumption. They won't be moving. I don't think they can. I don't think they're a significant enough nation to be going early. In saying that, New Zealand obviously did for maybe for other reasons I don't know.
John, to answer your question, shake your head really. I haven't really spoken personally. Well, I have on the Sunday show with Julian, and he just shakes his head. He thinks it's just ridiculous.
Well, that they've moved.
He should know more than certainly I do. A, he lives there. B, he's an economist. He's shaking his head, so I can't add anything to that, I'm afraid.
Yeah. Well, I think the ECB have maybe set the tone for this region. The patient tone. I mean, she's totally dousing the flames. She's not interested.
They're all following the RBA. The RBA just continuously said not going.
Yeah.
And
now the Fed are going.
Sorry.
And now the Fed are going.
Well, they're tapering.
But that's the start, though, isn't it, mate? I mean, that's the start.
It's a shot over the bow.
Yeah. So, and I think we're going to get something similar from the Bank of England today. I think there's going to be some kind of movement there.
They must all have been on a Zoom call, mate. I think they're all doing the same thing.
They would have been. They would have discussed it. Yeah, for sure. I mean, it will look like they're just reacting after. Like, oh no, 24 hours later they've raised. Didn't know they were going to do that. But yeah, of course, they're all talking between themselves about what they're going to do. Which is it's a benefit to the world economy, but then by the same token, it kind of like allows each other to be kind of quite Machiavellian, doesn't it?
Yeah, I think what they would be zooming and they'd be saying, WTF are we going to do about all this money we've just printed?
Yeah.
How do we solve this problem?
Yeah.
I know we won't raise interest rates.
Yeah.
I don't know, but yeah, there's got to be something going on.
Yeah,
they can't
just
they can't maverick. They can't. I don't see how they can maverick. And that's why the Kiwis is so interesting and so strange.
Yeah.
But looks. I don't need to tell you that we're in strange days. That's for sure.
Yeah. Well, should we get to the quiz, mate? I don't, hopefully we haven't destroyed John's quiz. He might have had loads of questions on all this stuff.
Ah, well, how good's your memory?
How you doing, John?
I'm good. I'm very good.
So we destroyed your quiz by talking about all this stuff. Is that the first 5 questions done?
It's the hardest part of the quiz, predicting what you guys will talk about to make sure the quiz is still relevant. Questions getting burnt.
Well, nothing we talk about is relevant, so it doesn't matter.
It's all
yeah, we're only talking about conjecture. We never do any conjecture. We never talk about facts, really. So we should be on pretty good ground.
No.
And I'm brain dead today, so I should ace this.
Yeah, you'll be off, mate. Okay, let's see what we got.
I haven't done 1,000 things drives for years.
Yeah, unfortunately, I do it pretty regularly.
The last time I big long driving was in France, and that was about 15 years ago.
Tell you what, I'm starting to weaken, John. I used to be able to do 1,300 no problem, but 1,000 a day really knocked me around. I'm phew.
I'll take a rain check. I'll take a bar. I'll go to the bar in a minute and take a rain check.
And then I got home and saw I bloody lost a trade.
Did you say you just done 1,000 miles, mate, in a day?
Okay.
Kilometers today, yeah.
Kidding me? That's like I
Bamboo
know. Yeah, that's to the lakes and back for me, which is I could do. I mean, I'll go once to the lakes, but I wouldn't just sort of turn around and come back again.
Would you come back?
Well, I've gone from nearly the bottom of Tasmania right up, and I'm in the bottom southeast corner, right up to the top northwest corner, and then down the other side a little bit.
Wow!
And then back.
No wonder you're tired. God.
Yeah, I'm buggered.
Fair play for you
to get anybody's, mate.
Well, let's see if you win the quiz. This is what you need to do every week. Training.
No, not going to happen. 2-day trips, I think.
All right. It may, yeah.
How many, John?
I'm sorry. You got 4. There's 4 countries. There is 5 actually. But yes. No.
Oof, I think they
can't remember.
Interestingly, I think it'd be they're definitely in.
I can't think of the 4th one though.
I think I got the 4th.
Canada?
No.
Oh, US. The US.
Oh, okay.
Yeah. There should be 5 because Russia didn't turn up along with.
Yeah, that's right.
Yeah, they.
Well, the UK is still burning coal.
Yeah, this is like a pledge to sort of stop burning it.
COP26.
Yeah, this is a pledge to stop burning it. Eventually. The reason I put that, I just don't. There was an interesting one on. Was it Shell? Shell says it still needs its oil to pay for its transference over into renewables.
Yeah.
Which sea creature has just taken its carpet home?
Oh, cool! This is a cryptic one.
This is very cryptic. Yeah. I to a certain extent, I had a lot of sympathy, but I didn't have a lot of sympathy. both at the same time when I read the story.
Secret
And
is
actually,
just-
if they'd have come to Trading Buddies for the last 2 years and listened to the goat, then they wouldn't have done this.
Oh, really?
Yeah. Nobody in this conversation would have done this. The
Sea creature's just taking
Yeah.
its carpet home.
shark. No. I might have a few later on, actually.
Brandy? Yeah.
Okay. Can't be prawns. Shrimp.
Now that is close.
Prawn, shrimp.
Yeah, Cobra,
Another
yeah.
shrimp on the Barbie. Yeah,
Squid.
I
Oh,
thought
yeah,
Cobra
Squid
myself.
Games, of course, yeah.
Squid Game. Sorry. Jeff,
I still do not get the popularity of this
is,
game. I just
put the
do
chart
not.
in.
What was the carpet bit? Oh, the rug
Oh,
pull.
no,
I see.
the rug pull.
Yeah.
Rug pull.
I
I
get
was
it.
amazed. Yeah, the game. I haven't got a clue what this game is. I don't watch TV. I don't know.
I've seen the first half an hour, and I watched it with the subtitles on it. And as I said before, it reminded me of being a kid, so I really liked it. But I haven't gone back to it, which is quite significant. I don't think it was, it didn't really do a lot for me. I thought it was okay.
Yeah, and then these guys came up with the coin. Nothing to do with the game or anything like that. All the people who liked the TV apparently wanted to play it, shoved their dough in, and then there was one article said you could buy it but you couldn't sell it, and this one guy said that should have been your red flag.
Unbelievable.
And then they whacked it up in price. See you later. And then-
How does it come down if you can't sell it?
No, if you buy the coin from that company, as far as I can work out, this is what, and I'm a bit slow, is that you bought it, but it's on the pancake swap sort of saga. So you're not really holding it yourself.
Oh, I
You've got it in your
see.
own little, you haven't got it in your own little thing. You've got it in that zone, and all of a sudden it's a case of.
Oh, I see. Oh, that's awful.
Yeah.
That really is awful.
Yeah, we truly are mad.
Oh, do you know, mate? It's do you know the terrible thing is that it obviously pays to people's fear and greed, because they want to have that coin that does what so many people have heard about coins doing. But you can't really you have to sympathise and empathise with the people that want to do it, because we all want that, don't we? I mean, the fact that we're more aware to not do it doesn't mean that we wouldn't want to do it. We'd all love to buy that coin that just went bang, and we could retire. But it's sad because I don't know. Was there anybody that put in a lot of money in this, or was it just a speculative? Lots of £1,000 floating around here and
I
there.
think it was lots of that. I think lots of people actually put it in because they enjoyed the TV program.
Yeah.
I mean, I had no idea what this is. I just was looking around for. I thought, oh, this is a bit dangerous because I don't.
So you
know
haven't
what it is.
watched Squid Game, John?
No, Jeff. I'd rather go and watch a cold beer go down my.
Yeah, look, it was
No,
made for
I-
stoners, mate. I'm
I
sure it
haven't
was.
had TV in the house for 20 years.
Got no doubt.
No TV in the house.
You got no TV.
Wow, really?
Oh no.
How good's that?
I did a year in Tanzania.
How many kids you got?
and
Wow,
He doesn't need TV. then.
contraception's wonderful, isn't it?
No, yeah, I taught in Tanzania for a year, and the TV was so bad there, we never got it.
Yeah, I mean, to be honest, yeah.
And I came back to the UK, and I just
Interesting you ask about kids, Jeff, because I think that's the only reason that I've probably got a TV, in a way. You can watch what you want online anyway.
if what was
Yeah,
I,
well-
okay. The answer to that question: if I was going to have a family, I wouldn't have been a teacher.
You wouldn't?
No,
Why not?
I'd have picked a different job. Teaching is one of those jobs where you bring it home all the time. You're always marking homework.
Yeah,
It's just nuts.
yeah. And I bet you start to really dislike kids as well.
Yeah, I can go with that.
I think kids are great. It's like as long as you can hand them back.
Yeah.
No,
Yeah.
I shouldn't be like that. I'd be a bit out of a job. Easy one, Jeff. Easy one. Even 1,000K on the road, you get this.
Yep. When are they doing that? Because it's still that
They've
on my platform.
they have changed the company name. They're not going to change.
Their brand doesn't change.
Their brand's not going to change. Yeah, no, because they got the Facebook, Instagram, WhatsApp, it's all part of the same thing.
Interesting.
It's something like, it's something. The only reason that I've got it is to keep in touch with my sister. Okay. Which major currency service might be offering a smoke? Yes.
Yeah, I'll follow, but I didn't know.
Yeah, they're starting to promote
more
vaping.
information.
More information apparently is British. Apparently, the costs of offering it on the health service will outweigh the costs of doing the real deal.
Yeah, I think the treatment of people smoking cigarettes is, as you say, cheaper than providing e-cigarettes.
I thought it was quite a nice one.
Yeah.
This is a really weird one. Sorry, But in a way, the reason this is in, because I don't think crypto, like the goat used to say, I don't think it's really going anywhere. There's a Premiership club. They came up into the Premiership this time around, and their shirt sponsorship deal is paid in crypto.
Oh, okay. I'm gonna say,
Jeff's looking at, he's giving it
a lot of thought.
That's close.
Okay. Is it a what do they call it? First league?
They've got a music.
First division.
They did have a musical connection. This particular club. I don't know whether it's still there.
Now I think I know who you're talking
about. Norwich. Yes, just got it.
Jeff's got it.
Jeff got it. Yeah.
Well, because of Elton John.
Yeah.
Yeah. What for get the shirt deal, and it's in with crypto.
Wow.
Oh, also, Gary, you might be able to confirm this. I'm sure I heard on the way up to where'd I go? Edith Creek today, that the Commonwealth Bank of Australia is now going to accept crypto, or 5 major cryptocurrencies as something. I don't know what was said exactly. What are they going to do, Gary? They're just going to accept it as currency. That's interesting.
Got shares in that bank. Not many.
The CBA?
Yeah. So
that was a good performance. No, I've got no idea, but I did hear something. Something's going on. They've definitely accepted it in some fashion, because all the, as I heard it, what gen are we up to? Gen Y, Gen Z? I don't know. Gen X, Gen Y? Gen Y. Let's say Gen Y. Are all blowing up because they can't trade in cryptocurrency, or they can't bank in cryptocurrency. Interesting. Which Swedish?
Yes, Paul's got it. Ashley's got it. It's a big thing here, IKEA, but not for the reason you think.
Really?
On IKEA.
Yeah, IKEA. Yeah, IKEA is. IKEA got some supply issues, so the price might be going up. But they pushed the price onto the franchises. I didn't realise that their franchises.
Oh, right.
So the franchises in Malaysia, they make most of their money by selling food.
Oh, do they? What, in store?
In the store, yeah. They've got the restaurant just out in the store. It's packed with cheap food. It's the Malaysian thing to do in the afternoon. I went once with my wife, and I said I'll never do it again.
Well, the food's terrible.
Oh, the food's great, but I couldn't deal with the fact of doing that and going into IKEA to.
Oh yeah.
Easy. No, yeah. Move along. There's nothing to see here.
Yep. It's actually 2.
Yeah.
Yeah.
Yeah. They're all at it.
And this week's musical question is not a playing musical question, but it's Richard Branson and Tony Fernandez.
Oh,
Work in the airline industry. How are they both connected through music?
Maybe
That's very close.
okay.
who is he anyway?
Don't know.
Tony Fernandez runs AirAsia out here. It's the low cost carrier in this area. But he worked for Virgin Group before he came back out here as a manager or vice president of Warner Brothers Group. The reason that this question is, I'll be using this one for some of my students to say it's good fun being a musician. It's great fun to be on stage. It's nice to make an album, but the big bucks aren't in making the records. The big bucks are in the companies that own your contracts and shove out the merchandise.
Yeah,
Mate, nothing's changed. I keep telling you this. The bloke who makes the money is the guy who sells the shovels to the miners.
Yeah.
I did a concert for AirAsia just before the pandemic. They sponsored the concert, and they sold out 2 nights. I feel they cleared $1.5 million. And all the merchandise.
He looks like a Trump sympathizer.
He does, actually. Yeah, he does.
But he's a wily businessman. He does quite well.
I'm sure they all are.
Yeah.
Don't you wish you were a wily businessman, Jeff?
Yeah, I certainly do. I'd have someone driving 1,000 kilometres a day and me sitting on the bum drinking beer.
Hey, if you'd be sat on the sofa drinking beer, I'm not sure whether that constitutes a wily business.
Well,
you meant to be on the phone doing the deals while they're up.
That's right. Yeah, well, I'll be selling it on as he drove up. Yeah, that's right.
Yeah. So by the time he's back, it's already cut and sold.
Yep. Now you're talking. That's what I'm doing tomorrow.
What did you collect? Was it bamboo?
No, I took a load of bamboo up there and bought a load of fertilizer back.
Oh, okay. Is it
you do one thing when you can do 2.
Just a general. From different people, obviously.
Yes.
Yeah. Oh yeah, no, that's very good, mate. Yeah, thank you, mate. That's a bit difficult for me this week. I don't think.
Sorry, no, I have learned something. The more time I spend on the quiz, it ends up being like one of them. The quicker I do it, the easier it's.
Yeah. Okay, there's the trick then. So next week, don't spend any time on the quiz. Make it easier for us guys with very shallow grey cells left. So, any thoughts, John, on the markets?
Me, I'm waiting for these 3 to fall. I took a short on Monday on the FTSE 100, and that went well for me.
Yeah.
And then I got out with a small profit, but I didn't lose it, and then it went back up. So it's where did I?
Yeah, I mean, I wonder whether the FTSE's still got room to travel. You know, we looked at the NASDAQ and the S&P, but the FTSE has got some room to travel still to the upside. I wonder whether they all just kind of, as I say, meander around a little bit, and the FTSE could rally another couple of percent. NASDAQ might have another couple of percent, maybe 5% left in it. But they could all sort of do that. I think we are not getting to that upper range before we start to see just a few more wild swings. You know, I don't think we're necessarily going to get reversal, even though it could happen. But I wonder whether volatility might just start to edge higher and we start to get a few more wild swings as we move forward now. Because now the tapers start. We've been waiting for this day for ages, haven't we? Yeah. You know, ever since they started to support the market. Eventually, they've got to take the market off life support. So we've been waiting a while. So yeah, I think volatility is likely to pick up.
Jobs might mean something tomorrow.
Jobs.
Mm.
Yeah.
NFP.
Yeah, absolutely, mate. Well, that's an interesting point, isn't it? Because obviously we're talking about the Jerome Powell saying the parameters haven't been met to raise interest rates, and we're not going to start talking about that until after we finished asset purchasing in August. Well, of course, if the jobs numbers continue to be very good, then I would have thought that those parameters will be met a lot sooner, and it might be an interest rate hike might be anticipated, before August, possibly. So yeah, yep. I think you're right. Numbers are important. Okay, mate. Well, I reckon you need to have a rest.
Yeah, I'm done.
Yeah, you're done. Thanks, John.
I haven't done anything today in this show. Nah. My apologies for that.
No, that's okay, mate. It's all good.
Duh.
We'll be back as always on Monday anyway. To have a look at the week ahead. We'll be back obviously on Sunday with the other guys as well. So yeah, join us then, guys. Thanks so much for popping in today on Monday. Thank you to Angel. Thank you to you, John, for the quiz, and thank you to you, Jeff, for being my trading buddy. I will see you next week.
Cheers, mate. And thank you all for being our trading buddies. And my apologies for being brain dead today. I will see what I can find when I wake up in the morning. And if the market's being very, very kind, I will share that in the Telegram group. If you're not in the Telegram group, that can be done simply by, I think, a link below us somewhere. Yes, it is. There is a link below us on YouTube. If you're not in that, I think you get a month for free. I think that's the case. In any case, have a great weekend. Bye-bye.